The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the April 30th terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a terrific start of your day. Let's make sure that you and I do everything we can to have an extraordinary Thursday. Of course, let's always remember what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible, but what's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm grateful for your presence, and I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, somebody else has got that exact same question. So go ahead, a little random act of kindness. That's the way to kickstart your day out there on this thoughtful Thursday. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow is off 97 points. Give me a moment. I just need to remove something from my screen. There we go. Makes it easier. Okay. Dow's off 97 points, trading at 17,935. The S&P is down 13 at 2,093. Composite off 38 points at 49.85. Russell down 15 at 12.31. DAX is up 21 points. The FTSE's down 17. Gold is off 33 bucks. Silver's down 80 cents out there. Light sweet crude up 20 pennies. Leading the charge, the upside is Equinix Inc. EQUIX up about $12, nearly 5%. World Acceptance Corp, WRLD, taking a spin around the world, up 13%, 14% nearly. That's $10 and change. Bailey and Pharmaceuticals up about 4%, $8. Rockwell Automation up $8, 7%. Martin Marietta up about 6%, $8 out there. Amerisource Bergen up about $6, 5%. Atlas Air Worldwide up 12%. Wuxi Pharmaceuticals 12% to the upside. Click Software Technology up 26% out there. To the downside, Harman International leading the charge with some volume, 1.4 million shares so far to the downside, headed back to a breakout area, I believe. We took a look at it during the first hour of the show. That's traded at 123.82. Pacira Pharmaceuticals off 16 bucks, down 20%. Baidu off about 6%, off $13. Yelp down 10 bucks. Biogen, BIIB, off about 8 bucks. Google's off 7. Kirby Corp down 6 bucks. And that's what's moving inside the markets. Let's start off by taking a look at the ETF structures out here. Let's go take a look at the QQQ series ETF. Right now, we've got volume of 7 million shares, 77 cents to the downside. What do we know about the QQQ ETF? Yesterday, closed just below the swing point of March 2nd. It says you're inside that lower part of the range out here. It is trading really almost just below the low of that candle session, 108.59. Volume yesterday, as it was pulling back, was 34 million shares versus the day before 36 million shares versus making a high with 31 million shares back on April 27th. Where is it that the Qs? Let me put the market profiles up here. Let's take a look at that. Give me a moment to do that. With this on our screen, let's turn those on. Then we can take a look at retracement levels. So we've got a new profile that began yesterday. That gives you a price target projection of 106.11. That'll take you right back into the swing point of April the 17th. At this stage of the game, that's a target. We're going to take a look at both sides of the market out here, both bullish and bearish out here because of the really intraday trading that has been going on that is likely to continue to go on for the next couple of weeks out here in this nasty, sideways, choppy-ish market that one day or one moment gives something to the bulls and the next moment gives something to the bears out here. There's no reason to believe that that has changed. Nonetheless, what you're trying to identify are different price price projection areas where price could move to. Again, 7.8 million shares so far to the downside. If we just take a look at natural retracement levels out here, let's see if we can get this to actually work. No, it didn't grab that. Grab that. There we go. We take a look at just natural retracement levels. Right now, you're only at your 0.382 retracement level, 108.52. If 108.52 were to hold, that would be pretty darn bullish. If we see price move below this area, that says 106.88. That brings in our 106.11 into play. That's what's going on inside of the QQQ ETF series. If we go take a look at the IWM, Russell 2000, off a $146 with 12 million shares. It now has run right down into support of its TAS market profile low. That price point exactly is 122.23. You're trading at 122.34 as we speak. Volume so far, 12 million shares. The swing point that it's testing, however, from March 26th, only has 27 million shares. We have only been trading for, 45 minutes, so it's coming into a swing point with volume. It's coming into a junior sign of strength, which had 41 million shares back here on March 12th. So if this level holds, it likely holds because of that sign of strength, that little gap up, 41 million shares back on March the 12th. That's really the volume benchmark that you'll want to be looking at today if, in fact, price can close below that TAS market profile at 122.23, potentially at a very strong support level. That's in the IWM. Let's go take a look at the SPYs out here. What are the SPYs doing right now? Trading out at 209.46, 25 million shares. If we take a look at retracement levels from low to high, swing point low that we would use is back here on March 26th. Go to the high out here on April 27th. If we take a look at it, the 0.382 retracement, also where it is trading right now. That price point objective, 209.29. It's also prices moved down in the SPYs right back to the price where it's most comfortable, and that is its point of control level, 209.01. The actual intra-session low this morning, 208.99 out there. That's where we've got our largest congestion area of both buyers and sellers, where both feel it's the best action to take out here. That is the real traffic tie-up, and if that level fails, then you're likely to see a price move down to 207.31 out here. If this level holds, and we take a look at, it's really traveling into, and it's testing so far its most recent swing point, which was that gap down on April 17th. That had 191 million shares out here. Again, you're at 26 right now. Let's say 30. It's got similar type volume. However, volume doesn't work on a straight line basis, and therefore it's probably much lighter than that 191 million share day on April 17th. If we take a look at also volume here, yesterday was on the slight pullback, 125 million shares. The day before, 86. So you did have volume increasing, and there was a high made with 80,000. Those are the parameters to look at inside of the SPY. Let's go take a look at what's going inside the Dow Diamonds right now. You've got the Dow Diamonds. They are priced out at 179.09, 1.5 million shares. The Dow Diamonds right now trading inside its April 17th swing point that has 8.6 million shares. Again, straight line math, it's moving into that level with volume. We'll see if that volume pattern can hold up. Its market profile says you've got support at 178.61. I would say if you close below that and you're closing into the April 17th swing point with more than 8.6 million shares, that says at least the 177.16 gets tested. And at 177.16, you'll then be able to benchmark that March 26th swing point that has 6.6 million shares. That's what's going on inside of the Dow Diamonds. Let's go take a look at what's going inside the VIX index out here. The VIX index testing and rejecting, so to speak, its 50-day exponential moving average. Price so far, the high intra-session, 1453. 50-day exponential moving average, 1429. Where's price trading at right now? 1423. This would be an excellent day for the market to give you a determination as to what it wants to do. If the VIX index can close above 1429, let's call it close above today's high of 1453, then the expectation should be that there's some real carnage that can take place in the market. You don't want to be long your positions when the VIX index is moving above that 50-day moving average and moving higher out there. That's where you'll see the largest price erosion, or hour. As Tom just said, make sure you have your stops in place. So make sure you have those factored in. Likewise, if this level fails, meaning price is unable to close above that 50-day exponential moving average, long live the sideways choppy market out there. That's its message as we speak right now at 10:17 a.m. If we take a look at the summation index, well, summation index has been negative for, not summation, it turned down yesterday in all of the indices, the New York Stock Exchange, the composite, and the Dow. If we take a look at net declining issues today inside the NYSE, you're at 1795. Advancing issues, 531. Declining issues, 2300. So you've got a 4-to-1. 4.5 to 1 ratio out there. So you've got some pretty good market breadth to the downside. If we take a look at the New York Stock Exchange, we take a look at its price erosion thus far, we would come off of the lows out here. I would come off of the lows from March 11th and go up to the highs out here on April 27th. New York Stock Exchange has not even made the 0.382 retracement of that move. That price level would be 11.023 out here. It would look like to me you've got the price oscillator down at a reading of minus 134. You get down to 200, minus 200, you will see a bounce. Whether you see it that day or you see it within a day, you would see a bounce. And what you want to see, you may see more than a bounce out there, even though we're moving into that unfavorable seasonal cycle out here. But so far, relatively little price erosion. But if that VIX index closes above that 50-day exponential moving average, that's where the real carnage can begin out here. That's what's going on inside the New York Stock Exchange. If we take a look at the NASDAQ composite out here, NASDAQ composite, this thing is, if we take a look at its retracements, I'm going to use the swing point out here from March 26. We go from March 26 up to the high on here on April 27th. We can see it's below the 0.382 retracement level out here. Just going back to the market. Yeah, that's the swing point that really you would use out here. That says that the NASDAQ composite could make its way down to, or should make its way down to 49.38 out here. Of course, I'm going to be watching this yellow line on the price oscillator because which is priced out at minus 60. What is it? Minus 67, minus 65 out there. Hey, we'll be right back, folks.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 127, S&P's down 15, Composites off 48. Let's go check in on the currency pairs out here. Let's start off with the Euro Japanese yen. Really not a great message here with the market selling off the way that it is in this currency pair, headed in the other direction. It really, the winner of that battle always is the currency pair. If we take a look at the Euro-Japanese yen yesterday, coming off of the lows, when we take a look at the swing points, basically, I'm looking at February 12th. That's the swing point high I'm using in order to take a look at a retracement, and the low of April 14th. Yesterday, moving into that 0.618 retracement level with a nice wide-ranging bar. You're having some additional follow-through this morning into the 0.786 retracement level. This currency pair, if it gets above 134, it's going to make that 100% move and get back to 136.69 area. This should be putting some energy into the markets out here. It hasn't yet, but the winner of this battle eventually in that little tug of war ends up being this currency pair. If we take a look at the euro versus the U.S. dollar, we're going to see that this too is breaking above an area of resistance. If we take a look at where this is now headed to, let's actually put this on a little bit longer term time frame. Let's do that first. Let me put the weekly chart out here. Let's take a look at a descending price channel. Let's see if we can go ahead and map that. It might be easier for me just to start with the line. Just want to start with, looks like probably right in about here. I just want to check this out, see if that, because that's probably, is that it? Just going through a process here, folks, of really trying to see where that price. Sometimes you got to use the line tool just to visually see if we can find some fairly good connect the dots, because it's not going to be the swing point up here back on the swing point high would basically be May 5th, and there's no way that I could use that as our price channel line out here. But this looks to be pretty. This looks to be pretty decent. So now let's see if it is what it looks like along the bottom as well. So now I'm just going to simply go ahead and use my price channel tool, and again, it's a weekly chart, so that looks to be about it. So pull this up to the top out here. Let me get rid of that trend line out there, delete that. So when we take a look at, now I'm going to go ahead and switch back over to the daily. What I wanted to do is try to find a natural area of resistance inside of the euro out here, and that's really at the top of that descending price channel out there. So that becomes a target. And now we come back to the daily chart. This shows up a little bit more. So we can see on the daily chart, we look at that price channel. That's pretty good. Should be pretty good, right around that range. Now, when we take that, would actually be the euro, in essence, making a 100% move, right? If we take a look at this entire cluster body of candles out here, which began, looks like right around the end of January, started to break loose the end of February out here, looks to me like the euro probably headed into the 113-ish area, maybe 114. And if it can break through that, then that says something else. But that probably becomes the price target. You can see that price is starting to move towards the upper level of its relative strength indicator. That gets you into more of the overbought condition. But at this stage, that looks like where the euro versus the U.S. dollar index is headed to. If we take a look at the Japanese yen out here, the Japanese yen right now trading out about 119.50. It's Japanese yen has basically been testing that hammer candle from March 26th. That has not tested the low of that, doesn't have to. But May 118.33 out here. If we see a break below that, then we're going to take a look at A to B equals CD to the downside. I might as well show you what that pattern would look like and how that would unfold. So if it breaks through that hammer candle, that then says that what the Japanese yen is going to do is go target the 117.15 area. That would be your 1-to-1 A to B equals CD to the downside. Quick check in on the Great British Pound out here. Great British Pound right now, this has had a nice move to the upside. Let's do the same thing with this currency pair. Let's put this on a weekly chart. Let me see what kind of this is broken through its price channel line out here. Of course, it has done it a couple of different times. My recollection says it's done it a couple of different times out here. But no matter how you look at it, it's most certainly has done that. That's looking at the Great British Pound. So then what does that mean? Where is this headed to? Well, right now, if you look on the weekly chart, in fact, I'm going to get rid of the price channel. We don't need that. That's just making things a little bit more difficult. We don't even need the A to B equals CD. It made a nice 1-to-1.618 A to B equals CD to the downside. Weekly basis made a nice little key reversal session, bear, bullish, engulfing, the whole 9 yards, the week that began April the 13th. If we take a look at where this is likely headed to, you can see it's made 100% move out here. And so this may be the extent of the move right now inside the Great British Pound. That's in the 155-ish area. Steve Rhodes with TFNN. We'll be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 122. S&P is down 14. Composites off 47. Russell's down 16. So our last half hour just ended. We're at 10:34 a.m. Let's go back and take a look at the 30-minute chart here for the the S&P futures. Once we saw price break below this price point right out here, what was it, 2,090 and a quarter? That gave us a message that price was likely going to go target 2,081. Has not gotten down there thus far. It's gotten down as low as 2,083.50 out here. So it's got perhaps a little further to go. We do not have any kind of bullish reversal signal, but if we take a look at the 30-minute chart out here, the other 30-minute chart, we can see that price is beginning to move lower with less relative weakness out here. If we were to see a bullish reversal signal right now, you can see it's a piercing candle that's formed. Could be a bullish engulfing candle. That would be a signal of a market that wants to pop. Where does that take us to? 2093, 2097, potentially out here. So, that's the pattern that's going on out here. Remember, we take a look at these patterns when it's a psychology. We're just taking a look at the trading of psychology, just simply with regard to what buyers and sellers are doing with regard to whether or not they really have any kind of energy behind the move out here. And this is one of those tools that just shows that. It displays it in real time for us. So we know that we were in the fifth wave of a wave count to the downside and prices moving lower inside the ES mini with less relative weakness out here. So that does not mean that the 2081 is 2081 becomes the target. But again, this is a 30-minute chart. It's a 30-minute candle. You got to wait until you get to 11 a.m. out there. Let's go out to New Jersey to Victor. Victor, thanks for calling. Thanks for holding. How are you doing this morning?
Good. I put the stock charts on. I put the Fibonacci retracement on it. It looks like you're on maybe a butterfly there because you have two highs, 133.60, 134.54, and then you got a low of 121.63 and 122.60. And it sort of looks like a butterfly. And in the middle, you have 129.25. Is that a butterfly or no?
Well, it depends on which swing points you're going to go ahead and use. So if you were going to use, the expansion from March 19th, as your X point, so to speak, then the answer would be that would be a butterfly pattern. It would be about a little over 1.6 minute expansion all the way up to the top. You're referring to the topping butterfly? Is that what you're referring to? Or
yeah, I don't know. You put it on stock charts and you hit a retracement that draws the whole thing in for you. And right now you had a 0.75 retracement from the 122.60.
Well, off of the bottom, if we take a look at now off of the swing point. So to answer your question, is there a butterfly pattern to the downside? No, I don't see it on a daily chart. Is it a daily time frame? Okay. So if it's a daily time frame and we're looking at a potential butterfly pattern to the downside, the answer, I don't see it, because a butterfly pattern is going to require an A to B equals CD pattern. That's going to be the first thing. And with regard to the upside, I think that one would be stretching the interpretation of a butterfly pattern, trying to come up off of the March 19th, because you basically had a 100% move back on February 24th, Victor. And then the real message for you, are you short Apple?
No. My real question to you is, what are those three candlesticks, the last three candlesticks? What would you say they are?
The today's candlesticks, what's going on inside of Apple?
No, in the last two, there's three big, long red ones. What are they?
Well, the one that's of most significance to Apple is the trading day from April 28th. That's the one that actually gives you both the bearish message and, if Apple can get above that high, the bullish message, because that's what's referred to as a key reversal day. And what happens on a key reversal day, Victor, you're looking for the market to be in an extended condition. I like to use either an A to B equals CD pattern, which in the case of Apple, we could come up with one, as well as taking a look at, was that day or the prior day near the 70 level of the relative strength indicator. If it is, then that says the market is kind of stretched. That's the first thing you need. The second thing you need is the prior day's high and low to have been exceeded in the current day. We had that on April 28th. And then finally, what you need is just simply a close in the opposite direction. Well, Apple did more than that. It did all three of those things, and it was a nice bearish engulfing candle. What that says to you, though, is that we don't know anything more about Apple other than it probably is going to come down and try to test its swing point low from back on March the 12th out here. And that's got 48 million shares. Today you've done 27 million shares. Price is moving into that area. It hasn't touched it. With volume, I would say that Apple is likely to go test that low, 121.63. We really won't know until we see it get into 124.90.
It'd be healthy if it closed all its gaps, too. It could take 7 months. It went down for 7 months 2 years ago.
No question. And if it did that, then you're really looking for a price target around $98, $99, something along those lines. I think it's always best to just really take it one step at a time. That key reversal session is fairly large. That is a strong indicator of a market that's going to that a market is going to trade, in this case here, lower. But the thing is, then you've got to say, okay, lower to where? Your target's always got to be where's the most recent swing point out here, and then you can assess from there, and that takes you back into March 12th. And that's really all you can take a look at all those gaps, but until we see how March 12th is dealt with, we really won't know.
That watch is a big dud from what I heard. I don't know. So you can use that as a reason.
It doesn't sound like you're going to buy one.
Nah, I'm a little too old for the watch.
Yeah. I rarely, only if I'm really dressing up and going out, do I even throw a watch on these days? And even then, well, most times I
buy it for
don't.
Christmas.
What's that?
I mean, it might be a good Christmas item for the kids.
Look, Apple's a great marketing machine, and Apple's got a following that. Look, I started in the personal computer industry, Victor, back in 1983, and then became one of Apple's largest dealers in the Southeast in the state of Florida. And I can tell you from back then that Apple has a following. It had it back then. It's got a stronger following even today, and they're probably going to sell a heck of a lot of Apple Watches.
I know. Yeah, definitely. That's what I mean for the kids. The kids will buy them. They buy everything.
But with regard to how it impacts the the stock chart and so forth, I don't know that the Apple Watch is the whole key and I haven't read their management discussion and analysis. It probably would be bad to go back and take a look at it. But stock-wise, Victor, the best thing to do is let's pay attention to that March 12th swing point and see what's happening as prices are getting down there. Has it got increasing volume? Does it test with lighter volume? If it does test with lighter volume, then it's in a trading range from about the 122-ish level, maybe to as high as 131. One thing is for certain. If Apple does take out that high from last April 28th, 2 trading sessions ago, which is 134.54, that's an extremely bullish message.
Yeah, because if you go to stock charts, they say it's going to 164. I don't know how they figure out their stuff. You know what I mean? The point of figures.
Yeah, just a different tool, obviously, to help project price. I would say if it is able to take out that high that you and I just took a look at, I would give you a price projection of about, let's see, 150.60 to 158.48. That would be my price projection. Now, that means that it does not close below 121.63 March 12th. So, that would be my price projection as long as that low is not taken out. But it's got to get above that high from, and I don't know what's going to drive it out there. We're coming into this unfavorable seasonal cycle, so it could take a while. Yeah. Apple could just easily trade sideways for a while now.
Yeah, they ain't going away. You see their new campus they built? They got to pay that off.
Their new what?
Yeah. They have a new campus in California. It's like a big circle. It looks like a spaceship.
Ah, okay. Well, I think they've got the cash for it.
Yeah, that's what I mean. Okay. All right,
they have a war chest. Hey, Victor, thanks for calling, and thanks for taking a look at Apple with me. That was Victor in Paramus, New Jersey. And what a war chest those guys have when it comes to cash, do they not? Anyways, 10:43. We still have 17 minutes to go. We took a look at the ES Mini with regard to its chart patterns out here. Let's just take a quick peek at the NASDAQ, the NQ, since we were talking about Apple. What we can see here inside of the NQ, and that's coming off, this is a 30-minute chart that we're looking at out here. And if we take a look at the high back here at 10:30 in the morning, that was back on April the 27th. That since that high, you can see a very nice descending price channel inside of the NQ. And what we're also seeing right now, it's down into the seventh wave formation. Sixth wave. It's got down to that letter count of F. Now, it's also doing that with a price relative strength divergent pattern out here, meaning it's moving down with less relative weakness. But it needs to form a bullish reversal signal, like now. I don't mean at 10:44. I mean by 11 o'clock during this 30-minute session out here. But you do have 2 potential reversal patterns that would be in play. Now, remember, there's nothing more bearish than a failed bullish pattern. Likewise, there's nothing more bullish than a failed bearish pattern, which was why when we took a look at Apple, we were so focused on that key reversal, bearish, and engulfing candle session out there, and why we could come up with price projections. Right now, to the downside, it's just simply the swing point. And to the upside, there is no really upside projection until it takes out that high that we were looking at. In the case of the ES Mini, we know we were looking at a price projection of that, 2081 level. If we're going to look at an A to B equals CD down on a 30-minute chart for the NQ, that's going to take us, let's go see if we can figure out that price projection. That's giving us a price projection. You're already below the 1-to-1 level. That says 44.24 would become that target for its next level inside of the 30-minute chart. That is for the NQ. If I take a look at the Dow futures, we're going to do that as well. Then we'll go back and maybe take a look at we'll go back and take a look at some of the equities that are moving. In the Dow, similar pattern. Let me just refresh my screen. Make sure that it's still active out here with regard to price moving down with less relative weakness. It, too, is doing that. Again, until we see a reversal signal out here, it doesn't. It's only what we call, it's only a forecast. It's only but it's a better weather forecast than most weather forecasters that we have out here. It becomes a potential pattern out here. We're just waiting to see whether the buyers are going to step in. But price right now, as we speak, is moving lower with less relative weakness. That can be overcome with a huge push to the downside out here. Let's go take a look at some stocks, individual stocks that are moving. There was, I saw a little inside the den said the UNG is moving. Let's go take a look at natural gas. We haven't looked at natural gas here for a while. We're looking at the June contract here for natural gas. Interestingly enough, its price is up above. Now, we know that natural gas has a seasonal pattern that typically finds a low in the month of April. Now, I believe that was supposed to be right around the middle of April. I don't have that chart handy. Nonetheless, at this stage of the game, April 27th was the low that we're taking a look at so far. Nice little bullish engulfing candle the very next day, additional follow through, and now you're above your market profiles out here. So what does that say? Just like we took a look at Apple, it's really, hey, how is it dealing with the current swing point out here? And that really took place on April 17th. I show volume on that day of 103,000 contracts, and today so far 108,000. So price is moving up into that area. That is a positive sign for natural gas. We're going to just take a look at where price would likely move to. I would look at a retracement from the session from March 18th down to that little doji low down here on April 27th. And I would say natural gas likely targeting the $2.79 area on the June contract for nat gas out there. And UNG is just simply going to be following along with whatever the natural gas contract does or does not do out there. Let's take a look at some things here moving to the downside. Let's see, percentage-wise, Yelp is the biggest mover to the downside, down 21% off $10. So that is a. Do you use Yelp out there? And I guess whenever you go searching for, well, it could be anything, right? Anything you travel, you see all the Yelp stuff out here. Whatever, I guess the question becomes, how do you monetize some type of service like that? Well, at this stage here, they're not monetizing it very well. Price is down at $40.54, and back on March 5th, 2014, so a year ago, this was priced out at $101.75. That's a nasty little haircut in a little over a year. If we put this on a longer term, meaning a weekly chart out here, just to see where this might be headed back to, this actually, maybe this has a confirmed A to B equals CD to the downside. And what I'm looking at is the candlestick from May 5th of 2014. That's the week that began. That had 49 million shares, and price moved down below it with 37 million shares. But this week would qualify as well. So far, only 22 million shares. So price moving lower, but getting below that B point, but doing it with less volume. That just simply decreases the chance for the A to B equals CD to fulfill its one-to-one price objective. What we also know about Yelp out here is that the equity really broke out the week that began July 29, 2013. $40.31 is the price. The actual low we've seen so far is $40.20. You're trading at $40.62. Still, that hurts. This is Steve Rhodes with TFNN. Doesn't hurt me, but hurts those that are holding Yelp. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 101. S&P is down 12. Victor, if you're still listening in, a couple of nice postings inside of the Tiger's Den. We're going to go take a look at those butterfly patterns for you, so I can show you what one actually looks like. First, we're going to go back to natural gas. So I mentioned that natural gas seasonally was scheduled to form a bottom in April. I went ahead and pulled that chart back up. I'll show you that. And that was really right around this, where we're at right now, is right around April the 9th. Was the targeted time frame out there. As we know, natural gas didn't form actually formed a bottom. We'll go back now, take a look at the actual natural gas contract here. There was one bottom that ended up failing that took place right here on April 13th. So, and price had moved down in that area, so we're talking April 9th. April 13th was the first time that it was really not until April the 14th that you saw that pattern when you had a nice little, small little bullish engulfing candle, that candle wrapping around that little doji out there. Of course, that pattern failed, and really we have two different butterflies. We've got the larger butterfly. So the butterfly pattern, you're always looking for an A to B equals CD to the downside out here. And if we take a look at there's several of them inside of the natural gas contract. Let's take a look at this one right here, and that's really one of the elements that you need to have. You've got to have an A to B equals CD to the downside. I'm coming back here to January 15th as my A point, my B point February 5th, my C point out here on the day of February 23rd. And you can see there you've got a nice 1-to-1 just slightly below that. So there's several A to B equals CD patterns. I can show you another one. That's where we're using February 23rd as your high. You're using March 3rd as your B point. You're using March 18th. Now you've got a 1-to-1.272. There's a third A to B equals CD down pattern if you really want to narrow things. And that narrow things would be the following. You'd start out here on the high of April 17th. You'd come down just through the 20th and then back up through April 22nd. You're going to see a 1 to 1A to B equals CD to the downside. Now, with regard to then the last thing that you need is an expansion of swing points. Well, we take a look at nat gas out here. Even if we just use just the smallest one out here, that's the recent one off of that little doji candle from April 13th to the high out here. You can see, in essence, what price did was about a 1.272 expansion out there. If we go take a look at the larger pattern for nat gas, that was the one that started right back here. We look at an expansion of, oops, that didn't work real well. I don't know what I did there, but that was interesting. Apparently, I hit a switch that I shouldn't have hit before. Oh, well, anyways, that took me back to this chart. That's not really what my intention was. Let me do this for you real quickly here. See if it'll work this time. And so if we take a look at expansions of swing points, you can see there's another 1.272 expansion. So when you're taking a look at butterflies, you've got to see an expansion of a set of swing points out there. Don't force it, and you need to see an A to B equals CD to the upside or the downside, depending on whether it's a butterfly buy or sell. Now, here's the thing, and I go back to this chart for you with regard to the seasonal chart, if I can find it real quickly before we end the show. Current slideshow from current slide. What natural gas ought to do is move all the way up into the June timeframe. So if it's going to follow along the actual date there, from a targeting standpoint, the actual date is June the 18th out there. If you want to get specific. That doesn't mean you're not going to see some pullbacks and so forth. But if natural gas has found a significant bottom, expect it to move up into the middle of June, and then duck out of Dodge out there, because that's typically where natural gas really starts to fall off the planet. So, folks, it is thankful, thoughtful, and terrific Thursday. Thank you so much for joining me here. Stay tuned. Our man Basil Chapman will be up next. Then we've got Larry Pesavento. We've got Daryl Martin, David White, and the Tom O'Brien Show from 3 to 5. Have a great Thursday, folks. Take care.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
This is TFNN.